Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. President Trump threatening to slap 25% tariffs on South Korean goods, accusing Seoul of dragging its feet on last year's trade deal. Markets shrug off the noise, Asian stocks hovering near record highs and currencies steadying. Samsung and SK Hynix among those leading the region's gains. As US-China tensions show signs of easing, we speak exclusively with Ambassador David Perdue about the state of relations between the world's two largest economies. And live from the Goldman Sachs Global Macro Conference, Primavera Capital weighs in on China's economic climate and how that is impacting investment ideas. At the Asian Financial Forum, Xpeng President Brian Gu will lay out his roadmap for navigating 2026 as the EV race intensifies. And we're also live at India Energy Week, where Canada's Energy Minister is expected to commit to expanding trade with India. Honeywell's President for Global Regions, Anant Maheshwari, will tell us how geopolitical tensions are reshaping business on the ground. Well, we're tracking moves in the Korean stock benchmark and the won today after President Trump's latest threat to raise tariffs on South Korean goods to 25%. And that's over what Trump claims is Seoul's failure to finalize a trade deal, which was agreed to last year. The renewed trade tensions might have been adding fuel to the risk-off sentiment, but it looks like the Kospi saying hold my taco at the moment, rallying pretty hard there by 1.8%. The weaker dollar and the haven trades also helping to keep gold above the $5,000 level for the seventh straight day of gains. And gold's been one of the major beneficiaries of the so-called debasement trade, a move away from fiat currencies and treasuries towards hard assets. Now, one factor in why we're seeing some resilience in South Korean assets today is the so-called taco trade, a view among traders that Trump always chickens out, or at least backs down on some of his most extreme threats. The new Bloomberg analysis does put this theory to the test, finding that since the November 2024 election, President Trump has fully executed on only 27% of tariff threats, with some eventually rolled back. In fact, only 20% of levies have been fully implemented and kept in place. Now, we've also just heard exclusively from Goldman Sachs CEO David Solomon on the challenges that the current geopolitical environment presents.
There's a lot going on geopolitically. There's a lot going on in the world. And as that stuff plays out, it can lead to speed bumps or, distraction. People move forward when they're confident. The noise sometimes can sap confidence. Yeah. I think at the moment, generally things look relatively green, but that doesn't mean there aren't issues that could pop up.
Well, let's get some more on markets now with Polka Mishra, a partner at Javelin Wealth Management. Polka, thanks as always for joining us. And I would like to start with the rally that we're seeing pretty broad across Asia at the moment. I mean, President Trump making a tariff threat to South Korea, and it's been pretty much ignored. Is the taco trade part of the landscape now?
Yes, I think that's exactly what investors are pricing in right now. We've had a strong run up to the markets already, Paul, so this is continuing from that. It's a Truth Social post. There are no details that have come in, and we've heard from Korea in the morning as well that they're figuring out the process of implementing these investments that Korea had promised of $350 to $50 billion. But that's been the trend, and exactly the analysis that you shared, that around 20% of the tariffs have actually been implemented. So investors price that in. The uncertainty is driving money away from the U.S., and it's very evident that it's not impacting the markets that Trump is right now trying to impact.
Yeah, we did see some modest gains for the S&P in the last session, but to your point, it does pale in comparison to the gains we're seeing in Asia at the moment. So what does a good allocation look like to you right now?
So we've been allocating more to emerging markets, more to Asia since last year, and that switch has helped us. That is the trend in the global investor preference as well. Not because the U.S. economy is weak, it is still quite resilient, but because of these policy uncertainties. So we like Asia, we like Japan, we like Korea, we like China, we like India. We've allocated to all these markets. We've reduced our allocation to Europe because we think growth is struggling over there. So these are the markets that we look at. And of course, we've allocated to commodities, and they've been on a tear. We think that precious metals, rare earth metals, these are stories that will continue, and gold still has a very big role to play in the portfolios.
Yeah, on the topic of gold, I mean, we do have, well, we've got charts aplenty at the moment just illustrating how aggressive this run-up has been, and for silver perhaps even more so. Accelerating at the expense of the US dollar as well, it seems. Do you see any end to this debasement trade?
No, we expect dollar weakness to continue through the year. Not just because of the geopolitics, but also if you look at the rest of the central banks, they're done through their rate cut cycle. We are expecting rate hikes from some of them. Of course, Japan, which is a normalization trade, as well as Australia. So we do expect U.S. dollar to continue to weaken through this year, through 2026. And it does not look like the U.S. Administration is averse to that as well. So we will see those flows throughout this year, Paul.
I mean, one of the frequent criticisms of gold, and you could say this about any precious metal, is, it doesn't pay you anything. You don't make a profit until you've sold it. So when you look at a chart like the one that we just saw, at what point do you take profit and then put it into some sort of income-generating asset?
So I think right now it's too early for that. You have to see the reasons why the price is running up. And right now it's the central bank buying that is continuing to give us price stability or floor in pricing in gold. We don't see that stopping. We're seeing China continue to buy, India continue to buy. It has actually finally, it's acting as the safe haven asset that it is supposed to be, which it was not for several years. The investors didn't treat it like that. So we don't think that it is a time for profit taking in gold. There are fundamental reasons to be in gold. Silver, slightly a different story. It's also the industrial applications of it. So there's enough room in the portfolio, I would say, even for aggressive profiles to have gold in the portfolios.
Yeah, well, look, there's no short of uncertainty around at the moment, which is providing this tailwind for gold. And I mean, one of the factors which is looming large now is the possibility of another shutdown in the US. I'm just wondering where you place the odds of that happening and how you're hedging in advance of that possibility.
So it is a possibility. We do not think that shutdown is going to impact the market significantly. We also think that if that shutdown is going to happen, it's not going to be such a long shutdown as was the last one. It will be short-lived. We don't think it's going to impact policy making too much. We're not expecting rate cuts from the Fed, so the implication of data will be limited. So for us, that's not a very big risk to the markets at this point.
Yeah, let's talk a little bit about the Fed, because, of course, we have a decision this week, not expecting any change to the rate. But what are you expecting to hear around some of the commentary? Because, as you mentioned a few minutes ago, the U.S. economy is in a pretty good place right now. Should the market be recalibrating its expectations around easing this year?
Yes, I mean, we're factoring in 2 rate cuts this year, but we think that they'll happen after the new Fed chair has been announced. We don't expect anything to come through until the June meeting. And that also, it's going to be more driven by the labor market than inflation per se. It still remains to be seen where the economy is and what are the data points at that point. When we had the rate cuts last year, we felt it wasn't needed because the economy was resilient enough. And we also see that labor market it's on the edge, which makes the Fed uncomfortable, but it hasn't really given any alarming signals yet. So it may be possible that the rate cuts get delayed, but then there's also the political pressure and the question around the Fed independence, and that's part of the reason why we think that we might end up getting 2 rate cuts, not just because of the economic fundamentals.
Of course, in terms of political pressure, whoever the chair is just one voice in the room. And we've already seen plenty of evidence about how markets are able to pressure Trump and pressure others as well, perhaps the Fed, if they are seen to be not being data dependent. Do you think some of these concerns over Fed independence might be a little bit overblown?
Yes, definitely. It is just one vote. Right now, Trump has 3 nominees, I think, on the Fed board. But yes, we saw that last year as well. It's when the treasuries start getting impacted is when you will see Scott Bessent stepping in again. You will see the concern coming from everyone involved in the decision making. But there is the concern of the pressure. There is the concern around the independence. When it's probably a 25 basis points versus a 50 basis point argument, is it purely on fundamentals, or whether there's an element of pressure from the government, from the administration? But you're right in saying that market does manage to course correct the decision making and put pressure back on the administration when they go overboard with the pressure tactics.
Well, we've also got some big earnings coming out of the US this week. Apple, Meta, Microsoft, Tesla as well. That's just to name a few. What are you watching out of that bag?
So, especially from the tech earnings, we think earnings are not going to surprise either on the upside or the downside. But what investors are looking for is, number one, CapEx investment announcements, and number 2, revenue visibility from all these investments in AI. Now, the CapEx investments is kind of a double-edged sword, because we saw that with Meta last quarter, I think, that if there is a drop in CapEx investments or planned CapEx investments, then investors feel that, okay, there is lack of confidence in what can come out of this AI story. Whereas if there is significant investments, then investors think, where are the returns coming from? So it's very tricky, and the market reactions can be quite pronounced, I think, right on the day of the results. Intel, slightly different story, but a 17% drop is quite significant. We don't think earnings number is going to be a shocker. It's not going to be of concern. But yes, we're watching for those CapEx numbers and revenue visibility.
Polka, before we let you go, I'd like to get your views on China as well. We had some pretty decent industrial profits numbers out a short time ago, reversing 3 months of contraction. I'm just wondering how you view the outlook for Chinese equities this year. If you set aside the seemingly never-ending hangover from the property sector, are there some good opportunities to be had?
Yeah, we do like China. We are overweight China. The concerns with China are the domestic situation and the consumer sector, as well as real estate, as you pointed out. But the exports, on the other hand, have surprised on the upside. China's still got this, it's still the strong manufacturing powerhouse that you cannot ignore. We like the AI story there. We like the tech sector in China. We like the AI infrastructure sector there, new economies. So the areas where the government is focusing on, we think those sectors are of benefit. We're also seeing foreign money coming back into China with a lot more confidence. So that would continue to drive up the market. There will come a time, probably later this year, second half, when investors will start asking more questions about the domestic economy. But I think right now, the export story as well as the AI story is sufficient to drive the market further.
All right, Polka Mishra, partner at Javelin Wealth Management. Thanks, as always, for joining us with your insights. Still to come this hour, China's economy has headed into 2026, sending some mixed messages. Primavera's Ning is going to give us his read live from the Goldman Sachs Global Macro Conference in Hong Kong. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at how Chinese assets are tracking at the moment. Not a bad day for the CSI 300, better by a third of 1%. We did have the PBOC weakening its daily reference rate for the yuan just a little, allowing the US dollar a little bit of catch up, but we're still firmly below that 7 level. And we had a very good reading. China industrial profits climbing 5.3% on year in December. And that's the first annual gain in profits since 2021. Equipment manufacturing leading the way, and some encouraging signs that deflationary pressures may be easing. Well, the annual Goldman Sachs Global Macro Conference is underway in Hong Kong, bringing together top finance and industry leaders to discuss the key factors shaping the global economy and markets. Let's get over to the event now, where our Chief North Asia correspondent, Stephen Engels, standing by with our next guest. Steve.
Yeah, let's talk all things the Chinese economy with Ning, Primavera Capital Group senior macro strategist, also a professor at Shanghai Jiao Tong University. Thanks for joining us. So I read some of your research, more recent research, and of course there's lots of questions about the trajectory of the Chinese economy going into 2026. Really weathered the tariff storm pretty well on the back of exports, not necessarily just to the US, but to other emerging markets and the like. So the domestic situation, though, and domestic demand is still the big hurdle, obviously, and there are many tangents to that, which we'll talk about. But your title of your report is China's economy isn't stalling, it's pivoting. Obviously, it's pivoting to have a dual track and have more consumption. How long is this going to take them?
I think it will take a while. I think let's not forget that it has started during COVID, when we have the dual circulation policy. Yeah. So I think China has been planning this for some time, and it is finally bearing fruits or taking effect. So in a way, I think China has been trying very hard, investing overseas, both as a way to digest some of the overcapacity domestically, also trying to reflect its capability of growing more broadly and more internationally. So I think, in a way, this is helping China in the escalation of the tension around trade and tariffs.
Yes, but how long can the economy keep on relying on the old pillar, and that is exports? Look at the trade surplus, a record, trillions of dollars in surplus. That is causing angst among trading partners, no doubt. So you have to pivot a little faster.
I think it really depends not on China, but on the rest of the world in their attitudes towards this, right? I think it's without a doubt that China's manufacturing capability is beyond and above. And the question is whether that is going to bear some unintended consequences in trade, in local employment, in local politics. I think that is the bigger question about, well, how much of the headwind we're going to see in 2026 from the rest of the world. At the same time, I always try to say that, well, the way how we see it is probably a little bit unbalanced. Well, China is exporting a lot, but that's partly because we're not digesting or consuming as much as we could or should. So in a way, I think the policy should be focusing more or acting faster in trying to boost China's domestic consumption.
Yeah, so the Central Economic Work Conference and the latest plenum in December or November, and then now the National People's Congress and the CPPCC, the Langhui, the priority really is going to be boosting domestic consumption. How are you going to do that without exacerbating the fiscal situation? Because by most accounts, the local authorities do not want to boost fiscal spending.
I think that's part of the pivoting. I mean, yes, I do think that we should expand the fiscal deficit. I think that's the first and foremost. I've been advocating for, in such a low interest rate environment, we should be more aggressive and breaking the bank, so to speak, to increasing the ceiling of fiscal deficit. But even if we were to keep the same fiscal deficit, I think there are at least two routes through which we could make it more balanced and more effective. One is, I think we should be more effective in providing social welfare programs and trying to be more active in targeting those lower income or less privileged stratas of the society. So I think the marginal propensity to consume for that group is much, much higher for people who already have one or two houses in leading cities. So I think that is one direction I have been advocating the policymakers to make. Two is, I think, there has been some discussion about trying to subsidize in consumption, subsidize in interest payment for a mortgage, so that you can free up some of the purchasing ability from Chinese households. And then finally, there is one very peaceful, powerful piece of advice, which I think is expectation. How can you stabilize the confidence, try to improve the expectation so people are more willing and more encouraged to spend?
The confidence game. How do you boost household confidence? Because they're holding on to their savings because their paper wealth, because of their household value, has gone down. So it's a chicken and egg thing. Which one do you resolve first, right? Do you get people to spend or do you boost their confidence? How do you begin to put a floor on the property dilemma?
I think that's a harder question. I think I probably have an easier or better solution,
Yeah.
which is the equity market, the A-shares market.
Okay.
Yeah, I think it's not very easy to fix the property problem. I mean, after all, it was a bubble, and you always have to live through some of the painful adjustment and moderation after the collapse of the bubble. But now I think in Chinese households, their home assets are pretty much concentrated in either houses or equities. Equities used to be making a much smaller fraction than it is now. So with hopefully a slow yet sustainable bullish run in the A-shares market, hopefully we're going to see some improvement in not only the wealthy effect, but also the confidence associated with that.
Okay, well, the A-shares have been doing pretty well so far.
Not too bad.
Also, the renminbi has appreciated. We've seen it on the daily fixing is, well, today was a little weaker, but again, the trend has been stronger than 7, so 6.9 and
Yep.
change. How much further will the Chinese authorities allow that to happen, given the deflation cycle is still pretty entrenched?
Yeah, I think first and foremost, I'm very encouraged to see that RMB is going through this two-way fluctuation. I mean, because we had that reform of exchange rate mechanism about a decade ago. I think it's really nice to see that the market is now playing a greater force in setting the exchange rate. I mean, of course, with the intervention of Chinese government. But I expect there's further appreciation or strengthening in the RMB in 2026, although probably not as much as people were hoping for, people from outside China. I think we have to keep in mind that foreign exchange plays a very important role in China's ability to export. And given export's importance to China's GDP in the past 2 or 3 years, I think it's very hard for China to experience a large appreciation and maintain its ability to export. And also related to what you just described, I think a higher level of appreciation is going to eat into greater deflationary pressure in China's domestic situation, which I think is related to the confidence problem that we're talking about. So I think those all matters are somewhat interlinked, and I think we have to be very careful with going into one direction, but not too much, too fast.
How much longer will the AI boom happen? I do know that authorities have come down and cracking down a little bit on, or tightening up the restrictions on listing requirements here in Hong Kong, because so many AI companies have come here to list, because they want to take advantage of this boom. How much longer does it have?
I think it will still run for quite some time, even though probably with less enthusiasm. In a way, I think the run-up of the capital market is trying to encourage China's AI entrepreneurial activities and trying to use that to compete with the U.S. eventually from a national security perspective. So in the direction, I think that will persist. But then given how much enthusiasm has been poured into that in the past 12 months, I think the regulator is right in trying to curb some of that enthusiasm, trying to sustain and maintain a longer and gradual run, bullish run in the market.
Ning Zhu, so good to see you. Thanks so much for running through all the stresses and the opportunities in the Chinese economy. Okay, Paul, going to send it back to you. Another big interview coming up throughout today and tomorrow here at the Goldman Sachs Global Macro Conference.
All right, that's our Chief North Asia correspondent, Stephen Engel there, speaking with Primavera Capital Group Senior Macro Strategist, Ning Zhu. Let's take a look at how Asia benchmarks are tracking pretty well, is the short story, particularly the Kospi, better by 1.9% at the moment, and that is even after President Trump threatened 25% tariffs on some sections of the economy. It's all just being brushed off as yet another taco trade, seeing a pretty decent rally across most of the major markets. Plenty more ahead. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at where markets stand as mainland Chinese markets head to lunch. Japan coming back online, and we're seeing a broad-based risk-on rally across the region. The Nikkei up modestly, about 0.25%. We are seeing the yen hold on to gains that it achieved on Monday, 154.33 for the Japanese yen at the moment. I guess questions do linger about the durability of that strength, because there is no evidence that the BOJ intervened in markets on Friday, and it was really a currency check from the New York Fed which helped the yen strengthen the way that it did. Elsewhere, pretty good rally everywhere else. The CSI 300 better by 1/3 of 1%. The Kospi once again leading the way, 1.8% higher, and this is despite President Trump threatening fresh tariffs on South Korea. Even Hyundai Motors back in positive territory after losing a little bit of ground earlier on. Nifty futures, meanwhile, pointing higher by 1/4%. We are keeping an eye on the Indian rupee. It's pretty stable at the moment, though, but gold continuing to build on gains in this, somewhat interesting political environment at the moment. Well, Chinese investment bank CICC is rebuilding its IPO pipeline and strengthening due diligence as scrutiny intensifies following a surge in Hong Kong share sales. Speaking to us at the Asia Financial Forum, Vice Chairman and President Wang Shuguang also shared their outlook for deals this year.
For the past year, 2025, a lot of mega deal come to the market, say Eataly, yes, say Sanhua, say Cherry Motor, say Celis Motor, and a lot of A-share companies, when they want to expand their business to the global market, they come to Hong Kong. For this year, I think maybe not so huge capital company. Most of them have already closed their debut in Hong Kong. So in our pipeline, there are a lot of pipeline. A lot of market cap about 100 billion renminbi. Say this kind of A-share company will come to Hong Kong, and together with a lot of promising new economy company come to Hong Kong.
There are many new names that not a lot of people outside China have heard about. And there seems to be this information gap between foreign investors who want to invest, but sometimes some of the names they don't really know. There's not enough research. And I wonder how a big firm like CICC can help improve the access to these Chinese companies and research, the information that people need to make the proper decisions.
You ask a very good question. Now there are more than 340 applicants for Hong Kong Stock Exchange for the IPO. It's really a big challenge for investment bank to write the paper, For the past years, we have to put our resource to write the report. For this kind of promising company, but with great potential, even they are not very big, we will put our resource into this kind of research and educate the investors. We believe we have a very great competitive advantage. Now CICC, for our investment bank, we have started our systematically coverage to the early stage tech company.
And regulators have been a bit concerned about the deal quality of some of these listings as well. Have you heard of any signs of them trying to at least tighten some of the easing requirements or the like?
Being an investment bank, you have to pay attention to your work quality. You have to be responsible for your investors. So it's why we are now rebuild our pipeline. We want to, through our thorough due diligence, to find the right candidates come to Hong Kong. For those companies with great potential, but now are not so mature, we will persuade the entrepreneur to wait and get the next market window.
Okay.
Rather than now.
Okay. There will be more market windows. Be patient.
Yes, I fully believe there will be a slow bull market in the coming years.
Which I guess, takes us to now the industry itself, you guys and your peers and the dynamics we're seeing. We've seen a lot of consolidation in the industry. What are your thoughts on competition and consolidation among you and your peers and what you guys are doing specifically?
Yes. The consolidation is very good for the whole industry. You know, in China, there are more than 100 investment banks. Around 30 investment banks are doing the capital markets business, say IPO, follow-on offering. But in the global market, in the international competition, you know, there are only, say, about 7 investment banks from Europe and the US compete in this market.
Yeah.
If you want to deliver better service to our clients, to our investors, we have become stronger and with better risk control capability to service this kind of first-tier clients. So no consolidation. No one will become stronger. No one will become full-scale service provider. It's why I think this kind of consolidation is a very good trend and a very good regulatory environment for CICC and for our major competitors in the market. We will put more attention to our internal management advance rather for the price competition. I think it's really good for this industry.
That's CICC Vice Chairman and President Wang Xuguang speaking with the China Show co-anchors David Ingles and Yvonne Mann. Here are some of the other stories that we're following. U.S. Border Patrol Commander Greg Bovino is leaving Minneapolis following a public outcry over the killing of 2 U.S. citizens by federal agents. The White House says it's dispatching Border Chief Tom Homan to Minneapolis to ease tensions. Homan will report directly to President Trump, who has also told Minnesota Governor Tim Walz that he's considering independent investigations into the shootings. Major U.S. insurers plunged in after-hours trading on a U.S. proposal to hold payments to private Medicare plans flat next year. The government says the new payment rates will rise by less than 0.1%. Analysts had forecast a 6% increase. It's a significant blow for Medicare insurers facing a profit squeeze from rising care expenses and what they say is insufficient government funding. An Iranian news agency says Foreign Minister Abbas Araghchi is exchanging informal messages with U.S. Special Envoy Steve Witkoff. An Iranian ambassador says the two sides are in contact but don't currently have a fixed channel of communication. It's the first official confirmation since Iran's deadly wave of protests that Washington and Tehran are actively in touch. India's Commerce Secretary says negotiations on a free trade agreement with the European Union have concluded. Rajesh Agrawal says the two sides will announce details on Tuesday. It's expected the pact will be formally signed after legal vetting, which typically takes about 6 months. Agrawal says the deal will foster better economic partnership with the EU. China has reminded its citizens to avoid traveling to Japan during the Lunar New Year holiday, which falls in mid-February. According to Xinhua, Chinese citizens are facing severe safety risks. Chinese airlines say they will continue waiving flight cancellation fees for Japan until mid-October. Tensions are high after Prime Minister Sanae Takaichi's comments last year on Taiwan. Former FIFA president Sepp Blatter has advised football fans to stay away from America and this year's World Cup. The US is co-hosting the tournament with Canada and Mexico for about 5 weeks, starting in June. Calls to consider a boycott are getting louder amid President Trump's immigration crackdown and a fraying relationship with Europe. Up next, our exclusive interview with the U.S. Ambassador to China, David Perdue, as President Trump prepares to visit Beijing in April. This is Bloomberg. Welcome back. You're watching Insight. UK Prime Minister Keir Starmer says he won't choose between the US and China as he flagged significant opportunities for British businesses ahead of his trip this week to Beijing. Starmer told Bloomberg he can meet President Xi Jinping without angering Trump or harming relations with the US. Starmer told us that while the UK will maintain close ties with the US, it doesn't make sense to ignore business opportunities in China. For more on geopolitical risks, our Chief North Asia correspondent Stephen Engels now standing by with a special guest. Steve.
Yeah, that's right. We are going to have the honor of speaking exclusively to the U.S. Ambassador to China, David Perdue. Ambassador, thanks so much.
Good morning.
For your time on Bloomberg Television. So the big visit is slated to happen in April. We don't know if it's actually going to happen. Maybe you can shed some light on that. But what would potentially be the key deliverables for President Trump as he goes to Beijing, having already secured at least a temporary trade truce?
Well, I think Busan was a very important event as well that led to the meeting that we're trying to have in April. President Xi graciously invited President Trump to come to Beijing in April, and President Trump invited President Xi to come to the U.S. in August or September. So what we're really trying to do in this entire episode is to buy some time and space to allow our negotiators, Scott Bessent, Hully Fung, Jameson Greer, to negotiate a trade deal. And they were making a lot of progress, honestly, but we needed some more time. You saw the countermeasures that were used during 25. And so both leaders felt like we could benefit from this time out. So the deliverable in April is really to solidify the objectives and criteria of success for the negotiations this year.
How do you see the compliance so far of that truce, whether it's on the export licensings for rare earth and rare earth magnets, or the purchases of soybeans and also fentanyl, a big hot button issue?
Well, both sides have actually already completed most of the agreements that we made in Busan. I'm very encouraged, frankly. Fentanyl we're making progress on. Soybeans, they are on track to buy everything they said they would buy. So I believe that both sides were very genuine in their agreement in Busan. I'm encouraged by that. Fentanyl is a major encouragement to me. The Chinese, that next Monday, scheduled the 13 precursor chemicals that we asked them to. They put an embargo on it for North America. And most importantly, Stephen, they've actually stepped forward and are cooperating with law enforcement from the United States. So for the first time, law enforcement in the United States, law enforcement in China are cooperating on fentanyl inside China.
What has been the progress on just back-channel communication since that Busan truce and that meeting? Has it increased or, I've covered China for many years. I've interviewed a number of different ambassadors. Sometimes we're in the penalty box, the Americans. Sometimes we are having more open conversations. How would you describe it right now?
I would say it's improving multidimensionally. First of all, President Trump and President Xi have had 4 phone calls, various letters back and forth. And they, of course, met in Busan, and they demonstrated then a willingness to have more conversation, more interaction. And then President Trump and President Xi agreed to have more interdisciplinary conversation across the interagencies. And so we have mill-to-mill conversation underway. Our trade negotiators are doing that. Our law enforcement people are cooperating. So I'm fairly encouraged right now by more interaction. We're also trying to get more of our legislators in the United States to come out. We just had Adam Smith had a Codell here in the fall of last year. It was very successful. And so I'm very encouraged by that.
How do you feel whether you've repaired some of the trust deficit that happened? I mean, the Chinese officials I've spoken to following April tariff barrage, they felt an affront. They felt like there was a trust deficit that had grown almost insurmountable. Of course, we have a truce now. It's not a lasting peace, but have you spent most of your time just trying to rebuild the trust, or where is that trust level right now?
Yeah, I've been very well received in China by the leadership. You've lived there. You know that goes and comes. But right now, we have a level of respect and trust that's building. But the distrust didn't really start on April 2nd, the Liberation Day. I think it started back in around 2001 when China joined the WTO, became most favored nation status, and then realized developing country status. And so some of the imbalances that we're trying to correct today were born in the next 2 decades through state subsidies and so forth, transfer of intellectual property, all of that. And so right now we have a building and encouraging development in terms of trust between the two sides, manifested, I think, when you see Hully Fung and Scott Bessent having these phone calls regularly. They met on the side of Davos, and of course they met on the side at Busan as well.
What do you make of, when I'm talking about trust deficit, there seems to be one as well across Atlantic that was sort of amplified at Davos. And we've seen also in the last few months and in the coming weeks, including this week, a parade of global leaders, even very close allies of the United States, going to Beijing. You heard Mark Carney say a new world order, very deliberate. What do you make of this as these allies and other nations sort of, I wouldn't say cozy up to Beijing, but try and seek deals to sort of have a hedge against the United States?
Well, that's been ongoing for the last decade or so since President Xi Jinping came to power in 2012. My experience in Beijing is just the opposite, though. I've seen a galvanizing of our allies to the U.S. position based on what we did to negotiate for them in the magnet crisis. That proved our level of trust. The second thing we're doing is basically trying to negotiate our differences bilaterally with individuals. We had 12 trade deals done in 25 with some of our allies. And remember how they complained about President Trump's complaint about paying for NATO, right?
Yeah.
Well, they've increased to 5% now, thank God, because of the Ukraine. And so President Trump's getting results there, but those negotiations do not mean that we're losing confidence with them or that we're not galvanized in terms of negotiating in a single source supply world with China.
But then again, I've heard from other countries that there's behind the scenes some concern about some of the policies from the United States, and that maybe the Trump administration, in regard to Canada, maybe trying to coerce our allies not to do certain deals like Carney did with Beijing and impose and threaten 100% tariffs on all Canadian goods.
Well, we have a love-hate relationship sometimes with our neighbors, but Canada's been a long-time trading partner. That's not going to change. We respect the people there. We have a lot of commonality between the two peoples. So I think what's happening overall with our allies is a realization that they need to take care of their own self-interest. President Trump has said that. And what President Trump says, America first, he never says America alone. And we know that in dealing with China or even Europe, the collective agreement among our allies is very important in this relationship with China.
So obviously, out here, we've watched it, and we've seen some of the moves. We saw what happened in Venezuela. We saw what happened in Greenland. We've heard some of the other things. As they call it, the Don Road Doctrine, right? Sort of a controlling of the Western Hemisphere, and those are American interests. How have you heard? Is that resonating, or how is that reverberating through the halls of power in Beijing? Because they'd like to see their own sphere of influence as well in the Western Pacific, in the Eastern Hemisphere.
Well, I think what's happening in this year around Busan and then the meeting in April is really centered around that issue, and that is how do we take care of our self-interest as countries, as independent countries, and still deal with other countries in the world. China's no different than any European country. And so what we're finding is in Latin America, for example, and in South America, those are very key interests strategically to the United States, and so are the ones that China has around the world. So this is not going to bifurcate into east, west, north, south.
No.
What I believe is happening is that the rest of the world is realizing we have to find and rebalance not only trade relations, but geopolitical relationships around the world.
You've obviously heard the story about a continual purge in the PLA and the Central Military Commission, the top general now under investigation. What do you hear? I mean, the Wall Street Journal, for one, has been reporting that he potentially leaked nuclear secrets of China to the United States. Is there anything you can reveal on that?
I can't really address why he did it. Only thing is that we've been tracking his moves in that Central Military Commission for the last 3 years. And one person was removed a couple years ago, then a couple were removed last year, and then you see the move on these two now. So of the 7 people in that Central Military Commission, only Xi Jinping remains, and the other person who we think was in charge of the investigations. And so this is a major development. Vice Chairman Zhang was a lifelong family friend. So for this to happen is a major development in China.
A lifelong family friend of Xi Jinping.
Xi Jinping.
So what does it tell you on the bigger picture about the discipline he's trying to impose on what is essentially the largest military in the world by headcount?
Well, I think, number one, I take him at his word that there's a corruption effort underway, that he's trying to correct decades of corruption inside the military. And remember, the PLA used to have to raise their own money for their funding. When I was in China back in the 90s, they had to raise their own funds through commercial deals. Now, they outlawed that. So corruption is one thing he's trying to root out. I do believe President Xi is trying to do that. On the other hand, I think he's making sure that he has total control of his military.
Yeah, absolutely. You talked about, I think a few months ago, you talked about the potential for big commercial deals for America as the rapprochement gains some steam between Trump and Xi. I think you mentioned Boeing. There was a big aircraft deal in the works. We haven't heard anything about those deals. There's been no Boeing aircrafts purchased by China since 2016, I believe. Yeah. So we talked about deliverables earlier. What can be delivered? I mean, will that deal come to fruition? What's likely?
Well, we hope so. I mean, that's one of the things we do in the embassy in Beijing, and with my background in business, this is what we focus on to a large degree. We have things like Visa, Boeing, and others who are trying to get deals done. The deal we did in Busan around soybeans and lumber and sorghum and those types of things are critical to the relationship. We're hopeful the Boeing deal goes through, obviously. They haven't done a major deal in a few years, and it's a big deal. And I think it'd be very, very important for China as well.
Last question here in Hong Kong, and you used to live here as well. Yeah. Obviously, there's a very high-profile national security case with Jimmy Lai. We do know that Donald Trump has appealed to Xi Jinping to release him. He has been convicted on these national security charges and other charges. We're awaiting the sentencing. Is there any progress that Donald Trump has made with Xi Jinping to potentially lessen the penalty and the sentence for Jimmy Lai?
To President Trump's credit and President Xi Jinping, they had an open conversation about that in Busan, where President Trump brought it up and expressed his desire to, and even asked for Jimmy Lai to be released on humanitarian for reasons. And so I think that's an ongoing conversation. I haven't seen any development of that recently. I'm not sure that they're not waiting on the sentencing and whether or not there will be an appeal. But we know President Trump's desire is to have Jimmy Lai released on humanitarian grounds.
Ambassador Perdue, thank you so much for your time on Bloomberg Television. Yeah. Let's see each other in Beijing sometime and continue this conversation.
Absolutely.
Paul, we're going to send it back to you. Again, our exclusive conversation here in Hong Kong with Ambassador David Perdue.
All right, good stuff, Steve. That's Chief North Asia Correspondent Stephen Engle there speaking exclusively with David Perdue. Okay, let's take a look at how foreign exchange in Asia is tracking at the moment. The yen holding on to those gains right now, 154.40. There was no Bank of Japan evidence of intervention last Friday. For now, the yen holding on to those gains. The won, very weak, however, seems to be bearing the brunt of this threat on Truth Social that President Trump intends to lift tariffs because the South Korean legislature hasn't lived up to the terms of the trade deal. Looking at the India Open as well, seeing a modest risk-off sentiment. The EU and India getting towards the end of its decades-long trade negotiations. Up next, we're going to discuss the business of selling Italian food in China.
If these tariffs go back up to 25%, that then starts impacting businesses and puts Korea at a disadvantage to Japan and the European Union. So this is an important issue, but I do think this is one that we can resolve.
The big increases are probably behind us. We're moving towards the midterms. Affordability is a huge issue in the US. That creates an incentive not to sharply increase the average tariff rate further from here. The big picture, I think, is in the direction of this being less of a headwind.
Market being very strong recently, so some kind of a pause of profit taking is likely, but I don't think it will have long-lasting impact. The real kind of target from the President Trump is to have all the Asian currency to appreciate. I think this will have a more long-lasting impact.
Welcome back. Those were some of our guests reacting to President Trump's fresh tariff threat against South Korea. Well, let's take a look at how markets are reacting. Well, we'll believe it when we see it. Seems to be the general sentiment here. All major indexes are pushing higher, with the exception of the Sensex, seeing a little bit of weakness in India at the moment. But the Kospi better by 1.8%, really shrugging off this news. The yen also holding on to some of the gains that we saw. Most of the damage seems to be getting felt by the Korean won at the moment. But we're tracking the Asian auto stocks as well, including Korean automakers, one of the sectors that President Trump was threatening with higher 25% tariffs, or is threatening. That's alongside lumber and pharmaceuticals as well. But take a look at that. Hyundai Motor was down in the early stages. It's really shrugging that off now, up by about 1/10 of 1%. Hyundai Glovis and Kia, though, seeing a little bit of weakness in those two stocks. Let's get back now to the Asian Financial Forum in Hong Kong, where David Inglaze is standing by with our next guest. David.
Yeah, Paul, fantastic. Thank you. And I appreciate the jumping off point there, just looking at the Korean car maker space. And again, this almost on a daily basis almost changes as quickly, if not quicker, than the weather and whether or not we'll get tariffs on this set of cars from this specific market. But as you can see, the markets have just taken that certainly in stride. Now, as far as sort of the Chinese car maker space is concerned, we have a little bit more clarity, not full clarity on sort of the ability to really tap into fully these overseas markets. We've heard, of course, recently with the Canadians in Beijing, we've heard somewhat of a framework around overseas pricing into Europe. So we'll see how all that comes together. We're joined here on set, Brian Yu, Vice Chair and President of Xpeng. It's very nice to see. Happy New Year. I think we haven't seen each other since the turn of the calendar. I mean, I know you guys haven't reported yet for last year, but suffice to say, how do you think you did?
Well, I think 2025 was a momentous year for us. We showed triple-digit growth in delivery. We showed improving profitability every quarter. We have showcased our latest technology at our Tech Day. Really, excited about the physical AI development in our world. So I think 2025 was amazing.
Right. I think the last time we spoke specifically, it was during your tech launch day, right? And everything from your humanoid robot to, of course, flying cars, which we'll talk about later. But just make sense of how those things come together for you as a car maker this year. You said momentous year. How does it make sense as an OEM?
Well, first of all, I think, as many of you know, that Xpeng is not only focused on EV. We pride ourselves to be a tech-centric company. We are actually DNA in technology, in software, in AI. So many years ago, actually, we were probably one of the first Chinese OEMs to start developing capabilities that ultimately can lead to the AI core that we actually showcased last year, which includes AI mobility chip that was self-developed, Turing chip that now is on board of our latest models, our own large language model on board as well as in the cloud, and have tremendous computing power with the help of Eataly Cloud and our partners. So we really developed a capability that actually can power rapid development in the AI world. And that's why we are moving that capability from the EV, which obviously a lot of people say it's the robots on wheels,
right,
to actual humanoid robots, as well as flying drones and other modalities. So that's why it's a pretty natural shift for us to go from an OEM to these physical AI fields.
And between the company and your sort of the feedback loop you're getting with your specific retail customers, how do people feel that technology in your lineup of vehicles? I guess a lot of people who are watching from outside don't quite understand, just the makeup of, the Chinese EVs, for example. Us sitting here, we fully understand that almost, but just help us describe those touch points for the customers.
Last year, also we saw an explosion of interest in autonomous driving technology on board of volume-produced vehicles.
Yeah.
I would say before last year, it was mostly in a niche segment, but now you can see increasingly the more models, lower price segments are all possessing such capabilities. And Xpeng actually was really pushing the boundary of that. So, for example, we made the highest degrees of autonomous driving ADAS capability in a mass segment, which is we're the first one to do that. We also are developing such capability beyond China. So we actually are working with authorities in Europe and other regulatory bodies to see the development of these features in these markets. So I think we're quite excited that these features are becoming more and more mainstream. Start from China, and slowly you can see that expand outside of China.
And is the vision to roll that across your portfolio of vehicles and just the concentration of that in the product itself?
Well, it's both the advancement of technology, making the technology more adaptable in other markets. For example, the use of AI, large language model, for example, our VLA models, using our high computing onboard chips actually makes the adaptation much easier. For example, the models and technology we did in China, we actually put them in the roads in Munich, for example, last Munich Auto Show. It can actually navigate the Munich street without actual training because the AI itself actually can handle some of the complicated driving scenarios. That's the power that you're not going to get with a software-based approach. And that's why AI is so powerful and so much more useful when you have a global applications.
Now, the role of overseas markets from a commercial standpoint for you, I mean, we've seen some progress on either the European front or into Canada, for example. Do you think at this point those are actionable to you as formidable markets?
Well, as a company, we want to enter as many markets as we can.
Right.
Obviously, we love to enter, the markets that loves, the attractive, advanced EVs. For our global business right now, half of those volume goes to Europe. In fact, we're probably one of the first Chinese OEMs start with the European market entry,
right. Yeah.
and then develop, into Middle East and Southeast Asia.
Right.
For us, we think a tech-centric company, has best approach is to tap into the developed market where people appreciate technology, recognize premium quality, and want to use these products. And we actually did quite well. Actually, our growth in Europe last year is triple-digit as well. And also, I see this year, I would say we'll expect similar growth.
Yeah, and I'm tempted to ask you whether or not you guys sold half a million vehicles, but I know you haven't reported last year. So you mentioned the triple-digit growth last year. What's the rough target overall on revenues this year?
Well, we have not, obviously give any guidance, so I'm not going to give guidance on this show, but I think we expect very robust growth. We continue to gain shares in China and globally. I would say our international sales will probably be faster than domestic sales this year. That's our expectation.
Okay. In as far as, and I think every time we've had a conversation, you know probably where I'm going with this, are you going to break even finally this year? I mean, I'm looking at the direction of numbers. It does seem this 2026 will be the year.
Well, I think, first of all, you can see our margin has been improving every quarter.
Right.
We also are gaining scale, which is also beneficial to the overall profitability of the auto segment. But at the same time, we're also investing very heavily into physical AI development. Humanoid robots, mobility chips, flying drones, well, obviously that's a separate company, but also the other area of technology, we're going to continue to invest, with conviction. So I think auto profitability is, quite confident.
Okay.
But I think at the same time, we are investing for the future as well.
Are you okay with the cash you have on hand? Any plans to raise money to meet all these targets, for example?
Well, we have more than $6 billion on balance sheet right now.
Okay.
It's more than adequate for ours to fund existing growth.
Right. Last question. The flying car unit reports that you might take off here in Hong Kong. There's a window of opportunity in the IPO market. It's very, very hot. Is that something we can expect from Xpeng this year?
Well, I can't comment on the IPO rumor or news, but I would say that we're very excited about the low altitude economy opportunity. Our flying car company, Airridge, formerly known as Xiaopeng Huitian, is actually the leading and the largest player in this space. And I think, as you can see, the overall development for such a low-altitude economy, is moving rapidly. I think they actually will be at the pole position to tap into that potential. They're launching probably the first commercially available product later this year, which we would call the land aircraft carrier. With a vehicle housing a flying drone inside, can take 2 people flying per charge. So that will probably be the first mass available flying car that's actually sold to consumers.
Okay, well, Brian, it seems like every time I speak with you, there's a new update. It seems like it's a different company altogether. Fantastic momentum. Thank you so much. Let's speak again soon. That was Brian Gu there, of course, out of Xpeng. Guys, back to you in the studios.
All right, thanks, David. That's China Show co-anchor David and Glaze there, speaking with Brian Gu, Vice Chairman and President of Xpeng. Well, Canada and India are expected to expand trade in oil and gas as the countries reboot their relationship after a diplomatic chill. For more, let's bring in Bloomberg's Menaka Doshi, joining us from India Energy Week in Goa. So, Menaka, the action around the India-Canada deal is expected to take place where you are today. What are you expecting?
Well, that's right, Paul. It's a week of mending fences, strengthening relationships, So here in Goa, we expect that India and Canada will sign, or at least strengthen, I don't know if they will formally sign anything, but strengthen their energy relationship, which means India will import more crude and gas from Canada and export more refined products to Canada, amongst the many other aspects of this energy relationship that will also touch upon critical minerals and the supply chains for batteries. Now, in Delhi, as you know already, we're strengthening the relationship with the European Union, and there is expected to be later this afternoon an announcement on the free trade agreement. So it looks like a very busy week for India going into Sunday when the union budget will be announced. We're all going to be working 24/7, Paul.
All right, so what else are you watching out for?
Well, it is a buyer's market right now in the energy industry, and it'll be interesting to hear from India's Oil Minister Hardeep Singh Puri on how he is looking at the variety of options and calibrating the geopolitics with the best price available in the market. And that means making choices between Russian crude, Middle Eastern crude, and, US trade pressure. So we'll be talking to him, several Indian oil and gas companies, the Canadian minister tomorrow. We have a slew of interviews lined up, so keep it here on Bloomberg TV.
All right, thanks very much. That is Bloomberg Senior Editor for India, Menaka Doshi there. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching Insight. It's just in case you're curious what time it is here in Hong Kong. It's about 13 minutes to 12:30. It's about lunchtime right now. So why not talk about food, lunch, and really just the F&B scene, consumer trends to watch. Joining us here on set, Nicola Farinetti, chairman of Eataly, of course. He's here with us. He's paid us a visit, normally based, of course, not in the region. We were just having a conversation. Nice to see you, by the way, that you're still struggling with jet lag, but I think we're good to go.
It's fine, good to go.
Okay. Highlights for you last year as you expand the footprint of the business?
Well, last year was an important year because we opened 13 new stores and we reached the 70 number of stores mark. We are now in 17 different countries, 3 continents. Most important number, more than 5,500 employees. I mean, we're discussing a company that was a family, small startup in Torino only in 2007. So we're pretty excited to export this Italian way of living through food all over the world.
Okay, and in terms of overseas markets, currently, of course, the footprint is mostly in the U.S., but of course you have a number of stores around in the Asia Pacific.
Roughly 50% in North America, US and Canada, 40% in Europe, and the rest 10% goes between Middle East and Korea and Japan.
Right. Do you have any priorities between those markets this year?
Well, North America, it's the country where we see we have the most potential. We're already there. We have so many grounds still need to cover, and it's easier to develop for us right now. But we're looking at the world. It's a very specific moment in time, and we're looking at any opportunity that we really feel fits our brand and value.
Now, I want to ask you too, because a lot of people are trying to figure out the state of the U.S. economy and really consumer appetite, literally and figuratively, for example, in your case. How would you describe demand in your U.S. stores? And also, I want to understand cost pressures too, because people talk about inflation every day, and I wonder how you're feeling that.
I think in U.S. we're seeing actually what we're seeing more or less across the world. Usually in US just happen faster and earlier.
Yeah.
We're seeing a shifting between sit-down restaurants to more quick service, fast-paced F&B or deliver retail at home, maybe pre-sized, pre-cooked, ready to be eaten.
Okay.
I guess it's a combination of diminishing power, higher pricing, and also this willingness of convenience and fast pace that we keep requiring nowadays.
Right.
So I guess this is the shifting that we're seeing the most in the US. The demand is there. We're doing very well. We're very happy. But clearly today you need to watch the market every day to understand what's the next step should be.
And what do you think is the most important consumer trend you've noticed across the board as you travel and look at the, your different
I think
businesses?
that's the one. In fact, last year we opened our first called Eataly Cafe. We did 3 in New York.
Okay.
It's a very small Italian coffee bar, 200, 300 square meters, where everything is incredibly fast, super high quality, and you can go from breakfast all the way to early dinner, from cornetto, cappuccino to salad, pizza, you name it.
That quick, huh?
And people do not want to lose quality, but they want to spend a little less than they're used to, and I think this format is killing it.
And I guess from a financial perspective, intuitively, I just think it's better that there's quicker turnover, and the less time people stay in your stores, probably the better. But how do you approach it? Because people want convenience and they want things quick.
Look, our format is very resilient, right? But because when we look at our flagship, we have retail, we have sit-down restaurants, and we have quick service, we have events, and we have classes, all together under one roof.
Yeah.
So we are capable of moving the revenue through the year or through the months, now probably through the quarters, for what people are looking for. So we can explore more our retail opportunity, adding more tables in certain moment of the year. So it's easier for us than probably other businesses to adapt to customers.
Right. And clearly, the Italian offering is what you bring the most. And we were just talking about this. What among the ingredients or things that you sell do you source locally? And what are non-negotiables that they need to be sourced
So for us,
from Italy?
Being Italian is about tradition, about recipe, and about the real products that really define our cuisine. Take wine or olive oil or Italian pasta. But in each country we go, we try to thank the country and be more sustainable and source an incredible amount of array of ingredients there. Like we make cappuccinos with different milk in each city that we go. Because we want to partner with a local farmer. The same truth is for a lot of vegetable, fish, meat, you name it. So actually when you go to look at our store, probably more than 50% of the product we consume are actually local.
How much have you set aside for expansion this year?
This year we have confirmed so far 15 new stores. Maybe a couple of more are going to add. And we're going to keep growing in this fundamental that we're seeing working. So we're doing a lot of travel retail. We're opening JFK, we're opening both Paris Airport, we're opening Milano Linate and Caselle in Italy. We're doing flagship in US. We're doing some new Middle East, 2 new in Jeddah. Last year we did Bahrain and Beirut. So we're going to keep pushing in all different aspects. Few new Eataly Cafe probably that we cannot confirm. But we're excited, we're rolling. People like our brand, people like our food, and we need to keep pushing.
We can take advantage of that in Hong Kong. When do I get to see you guys at the Hong Kong airport, since you mentioned travel? Is that something you're studying?
We're studying. First of all, I love Hong Kong. I would love to have an excuse to come here much more often. Hong Kong is a difficult market for us because of real estate. We usually enter the market with a big flagship and finding...
Or the cost of real estate.
The cost of real estate, but also the availability. It's very difficult to find a prime 30,000 square feet of real estate in Hong Kong where to put an Italian food flagship store, right? So we're looking at all our options. Eventually, I hope we're going to get here. But we're lucky we have many markets in which we can expand, and we can't wait to find the right opportunities.
What about mainland China?
That's where we're studying. I'm going to Shanghai tomorrow, which I'm a big fan of. I would love to open in Shanghai. We're studying the market. We believe we're very close to be able eventually to announce our possibilities there. The reason why I really like Shanghai is because it's probably an easier way to truly understand mainland Chinese market, which is a ginormous market, rather than Hong Kong that we both know is more international. The number of products that you can bring, it's much larger.
Yeah.
So it's kind of a different market.
And we can import, I believe, pineapples for free here. What's your take on pineapples and pizza?
My take on disrupting Italian food tradition is that everybody can do whatever they want, as long as they know that their recipe is not Italian.
Okay. Let's just not call it that, right?
Let's just not call it Italian pizza, it's fine.
All right, fantastic. Nicola Farinetti, the chairman of Eataly, here with us at the AFF. Back to you guys in the studios.
I'm glad he cleared that up. David and Glaze there speaking with Nicola Farinetti, chair of Eataly. Here are some stories that we're following. Chinese sportswear giant Anta Sports is buying about 29% of Puma, making it the German sports brand's biggest shareholder. Anta says the $1.8 billion purchase is a key step in the company's multi-brand and globalization strategy. Bloomberg News reported in November that Anta was among companies exploring a potential takeover of Puma. A Zijin mining subsidiary is buying Canada-registered Allied Gold for $4 billion, adding 3 operating mines to the Chinese firm's portfolio. Allied produces gold assets in Mali and the Ivory Coast and is developing a project in Ethiopia. The deal is one of the largest Chinese acquisitions of a Canadian mining company and still requires approvals from shareholders and regulators. Microsoft is rolling out its new Maya 200 AI chip as it pushes to provide an alternative to NVIDIA hardware. The chip will power Copilot for businesses and the latest open AI models on Microsoft's cloud. The company says Maya 200 beats comparable chips from Google and Amazon on some tasks and is its most efficient system yet. NVIDIA is investing another $2 billion in cloud computing partner CoreWeave to help the firm add more AI capacity by 2030. CoreWeave will also be among the first to roll out NVIDIA's upcoming products, including its new Vera CPU. Despite concerns about circular financing in the AI sector, CEO Jensen Huang says the investments reflect confidence in long-term growth. Coming up live from the India Energy Week, you will hear Honeywell's Anant Maheshwari and much more ahead as well. This is Bloomberg. Welcome back. You're watching Insight. We are tracking moves in Korean markets today after President Trump threatened to raise tariffs on Seoul to 25%. Trump says South Korea's legislature has failed to finalize the trade deal that the two nations reached last year. For more details, let's get to Seoul Bureau Editor Denny Thomas. So, Denny, the South Korean legislature hasn't passed this trade deal. What's the reason for that?
So this particular bill was introduced in November. This is following the trade deal that the two countries agreed. But there is a legislative process that has to go through before the parliament can approve it. Now, there's a bit of a back and forth from between the ruling party and the opposition party about how to go about it. The opposition party wants a detailed review before they can approve it. And on the other side, the ruling party is much more keen on following it through with a special bill. Now, that has caused a bit of a delay, but even so, there was no hint that Trump is going to be coming back at South Korea with kind of a strong message like this. So this has caught South Korea by surprise. So now they're trying to manage the situation, trying to go back to the US with a commitment that, hey, we are still on board. There is a delay, but that doesn't mean that we have no intention to follow through. So that's a kind of the behind the scenes activity that South Korean officials are engaged in this morning. As you can see, the markets have rebounded. So that's a bit of a sign that things are not derailed as when the news really hit the screens this morning.
Yeah, I think it's worth pointing out as well that this was a Truth Social post. You know, has anything official been received from the US side? And what do we know would potentially be tariffed if this goes ahead?
Yeah, so there is nothing official. It's all on Truth Social, which has been a trend, right? If you look at other instances where Trump was threatened. So nothing. The first thing South Korea responded this morning is by saying that we haven't received anything official. So that's one part. And this is across the board for most practical purposes. Autos are the biggest component of the South Korean export. So that's that, lumber, and pharma are the three sectors he's outlined. So yes, it kind of hits where it's going to trouble South Korea the most.
All right, Bloomberg Seoul Bureau Editor Denny Thomas there. Let's get to Indian government reporter Sudhi Ranjan Sen now. So Sudhi, what are the broad details of the deal and why is it so important?
Well, I mean, the broad details that are kind of trickling out. It kind of shows that 90% of goods, traded between India and the European Union, tariffs are going to drop in that. So it's that way. It is a huge market, and as President von der Leyen has said, that it kind of helps more than 2 billion people. That's the importance of it in a way. There is another importance of it, of course, that is the geopolitics of it all. We know that the entire trading order, the world order, is kind of being upended by President Trump at one level with his policies, and therefore you see countries across trying to do trade deals and other security deals between themselves to shore themselves up, find alternative markets, and this is an example of that. And if you look at India, this is a third trade deal that it has done in the recent months. Just shows how much of importance and urgency there is in emerging economies like India to kind of broaden its basket.
Well, there's a proposed security and defense agreement as well. What do we know about that?
What we know about that is it's going to be a broad framework between the two. And why that is important, while it may not lead to immediately, companies investing in each other or co-production immediately starting, why it is important is that it puts a framework in place, which will become then a template for individual nations and individual companies, or an enabler for them to cooperate and collaborate. We've reported earlier that India is looking increasingly at Europe, to countries like France and Germany for defense equipment. In fact, a multi-billion-dollar deal is likely to be announced. We have reported that's on the submarines. India and Germany are coming together to produce submarines in the South Asian country. Similarly, a fighter jet deal is more or less there, with India wanting to buy over 100 fighter jets from France.
All right, Bloomberg India government reporter Sudhi Ranjan Sen there. Well, let's get more on what India's trade deals could mean and rejoin Bloomberg's Menika Doshi at the Energy Week conference in Goa. Menika.
Well, Paul, thank you very much. I'm here in Goa at the India Energy Week with Anant Maheshwari, the President and CEO of Global Regions for Honeywell. Anant, good morning. And you're facing yet another morning of new tariffs potentially, with President Trump threatening South Korea with an additional 25%. 2026 is going to be better or worse than 2025?
So overall, I would say the trade order in the world is shifting. It's moving a lot more to bilaterals from a common global sort of standard supply chains. And that, in a way, is good for companies that are set up to think about countries rather than just regions. And we've been doing that for some time now. We, of course, began with India and China as specific focus 20 years back. And we can now replicate those models for Germany, for Korea, for Japan, for Singapore and Malaysia separately, and that, I think, is helping us in move with agility. What
does that help achieve? Higher margins, speedier decision making?
So I would say definitely speedier decision making, because the organizations become flatter and they are able to then operate to changing conditions. But it's great for customers because then customers and partners get a lot more agility and simplicity from our front end, and that's what we are really enabling in terms of working there.
Okay, well, it's good to know that you're trying to make the best of what has been a chaotic 14 months. But this morning, when you woke up and you heard of the potential additional tariff on South Korea, what does that mean specifically for your local business there?
So I haven't really engaged to understand the details there, but I think there is news comes both ways. The similar news that is coming on today, being in India here, is the EU-India FTA. And I think that is a very good indication of what could happen. in global supply chains. It means really increase in trade both ways between India and the EU. It also means that India's manufacturing capability will get a boost, as will for many other countries in EU. And the longer term impact is co-innovation on both the information technology world, but also in the physical world as we think about manufacturing, as we think about energy, given that we're here at India Energy Week.
All right, I know you want to talk about India Energy Week in India, but I'll go back and make a last try at, what is the net impact going to be if that 25% additional tariff on South Korea comes through, in terms of, will you have to rejig regional supply chains in some significant fashion, or will it just be a direct hit to your bottom line?
So, as I said, I haven't seen the specifics of what has been announced, but what I can say that we are geared in local supply chains overall, and we've been doing that for the last 5 years. So this doesn't happen overnight. We've been really working, and that began because of the pandemic. I think that was a great wake-up call to everybody in creating supply chains that could work within local ecosystems. We did that, and therefore we are very well set up to work with uncertainties that come in with any kind of bilateral changes.
All right. What looks most interesting to you in technology right now?
So I've spoken about it recently. This whole concept of physical AI is a new capability. That's not just a concept and a pilot. It's truly landing at scale. So maybe just first conceptually explaining what it is. If you think of a car plant in, let's say, the 5 top geographies, which is the US, China, Germany, Japan, and India, then you would say the car plant is different product, different technologies, different kind of a setup, different sets of people in skills that come into those plants. Therefore, the physical AI, that will depend on the domain there, the context of data there, and how determinism plays out in that plant, will actually configure differently in each of these geographies. And therefore, physical AI has an opportunity to be developed differently in each country. Now, that's conceptual. It's landing in a real basis in energy already. I'll take the example of autonomous control centers in different energy plants. We just announced in December our autonomous control center in Baruj in UAE. And that's an energy plant which therefore leverages the power of AI in truly creating efficiency, in creating effectiveness of assets, and enabling workers and skills very, very differently. We're seeing that autonomous land differently in different regions of the world, which is, I spoke about the Middle East, the US, Asia, all are developing differently. Why? Because energy sources are different, the setup is different.
All right, so this just simply means, a multi-fold expansion of business opportunity for you. That's what you're telling me.
It definitely means that we are geared to work in a way which is very local, but also create new technology. Yes.
All right. Talking about the India opportunity, you have more than 13,000, 14,000 people here in India. Are you looking at a significant expansion to that number? And where do you see the best potential right now?
So India has always been, for the last 2 decades, a very big focus area for us. And we've built it over a period of time, not just in one type of capability. It's not just software. It's not just the global capability centers. It is not just manufacturing. It's not just the front end of creating our connections in 20 cities with customers and being present to reach more than 50 cities. It's all of that put together. And therefore, we continue to expand in all of those areas. Definitely, India is gaining momentum at this point in time because it's playing in very different areas. I'll give you one example that people don't talk about too much, but is unique for us. There are only 2 places on the planet where we do core engineering and research for the energy value chain, which is basically pilot plants for, let's say, refineries and other petrochemical situations. The 2 locations for us are Illinois in the United States and Gurgaon in India. And this was done 2 decades back. So we've scaled it over a period of time, and now it becomes a very significant capability that India can now provide to many parts of the world.
Are you not impacted by the 50% tariff that India has been facing for the last several months on account of President Trump's trade war?
In some parts, it is likely, especially in sourcing. But the way we are configured, we are able to work the supply chains. The India products that are going out are likely to be for the Asia-Pacific region or for the Middle East region.
So you've had to redirect a lot of that over the last 6 months?
I would say we were geared already with the pandemic. In 5 years back, we started working the local supply chains 5 years back, so we were geared to work in the current bilateral situation.
So there has been no cutback in terms of the India product or services that you were exporting to the US
as I said,
that might have been impacted by this?
As I said, we already had local supply chains which were very different.
Okay, and so for instance, when you say that the India-EU deal might help, then if your supply chains are so localized, then how do you hope to benefit, let's say, from additional trade between India and the European Union?
It opens new opportunities. We were not doing that much, maybe from India to the EU, but with the FTA, that's possibility both ways. Because we have a lot of manufacturing in EU, we have a lot of manufacturing in India. I think we can optimize that much better going forward.
Okay. One of the things of key talking points here at the India Energy Week is really going to be the big new demand elephant in the room, which is AI. How are you looking at that opportunity? Where do you see maximum potential for growth, let's say in the near term, which is 6 to 12 months?
So I spoke about
outside of the US.
I spoke about physical AI. Let me land that in the outside of the energy sector, which we've seen a big pickup in 2025. Think about physical AI in buildings, in process plants, that is energy, and in the industrial context. Buildings is something that everybody relates to because a building is an airport, it's a hospital, it is a hotel, it is an office.
A data center?
It is a data center. It's also a school. So if you think about that, every building needs energy efficiency. It needs a better way of providing safety and security. It needs a better way of providing productivity for people. A lot has been talked about the potential of AI in helping these buildings. We saw a big uptick in 2025 for this turning from pilots to real production scale environments. We have seen universities, chains of hotels really implementing this in a big way. Airports were doing that already. Offices are coming together to do this. Today, I would say just by the end of 25, we have more than 200,000 sites now globally that have implemented this capability of connected buildings, which is creating a very large amount of data and benefit to the customers. So I think this is a momentum that is now feeding itself as we go forward, and we are seeing many parts of the world. Singapore is a great example. We announced this partnership with EDB for efficient buildings in Singapore. It's also a lighthouse for the world. What gets done in Singapore will actually be seen by a lot of the world.
Hopefully India's smart cities will learn from that. One final quick short question. The biggest challenge in this transition, the AI transition and the AI energy transition?
I think it's really about moving the appreciation and training and skill sets of people to leverage it, both as a provider as well as a user in customers. That has been the biggest I would say, blind spot for many of the companies doing this. We have been working on this for a long time. So we bring in talent of many different kinds, and that I think is an asset for us because we are geared already to do this. We began this journey 5 years back. And therefore, we've been really ramping up that talent base, and our customers appreciate it because we bring the best to them.
All right, Anant, thank you very much. I hope you have a great week here in Goa. That's Anant Maheshwari of Honeywell speaking to us about the potential both in India and across the world as we see this energy transition for AI take place. We have several interesting interviews lined up for you right here at the IEW.
All right, Bloomberg's Menika Doshi there speaking with Anant Maheshwari of Honeywell. And coming up, our exclusive conversation with Goldman Sachs CEO David Solomon. Hear his outlook on the global economy next. This is Bloomberg. Conference is currently underway in Hong Kong, and the bank's chairman and CEO David Solomon spoke exclusively to Bloomberg about the state of the global economy.
I think the economic setup is pretty constructive, especially in the U.S. But broadly, I think it's relatively constructive. You've got a confluence of lots of stimulative fiscal policy in developed economies. You have a general deregulatory trend and tone, both in the U.S. and Europe, particularly in the U.S. after a very, very difficult regulatory environment under the Biden administration. I think the Trump administration is moving quickly to rebalance regulatory burden, and I think there's a desire in Europe to also improve, the regulatory situation. That's quite stimulative. Massive AI investment, infrastructure investment around the world, which is also quite stimulative. We've been in a monetary easing cycle which also creates tailwinds. And we have midterm elections coming up in the U.S., where you certainly could see, specific policy actions, particularly around, affordability, that also could be stimulative in some way. So, economically, things set up nicely.
But?
Well, I wouldn't say but. A little bit the same as last year. There's a lot going on geopolitically. There's a lot going on in the world. And as that stuff plays out, it can lead to speed bumps or distractions. We saw one in April with the rollout of the trade policy that kind of slowed the economic momentum down. We then saw a pivot. We got through that. Obviously, there's a lot of noise at the moment when you talk geopolitics or you talk kind of global economic order. And people invest, people move forward when they're confident. The noise sometimes can sap confidence. I think at the moment, generally, things look relatively green. But that doesn't mean there aren't issues that could pop up.
How's your relationship with the White House right now?
Our relationship with the administration, is very, very good. One of the things that I've said publicly that I really appreciate, this administration is open for business and it's engaged with business. In the past administration, we had trouble engaging the administration. This administration takes your calls, will listen to your point of view. They may not agree with everything. We push back, privately and tell them when we don't agree. But they are open for business and engaged in a very constructive way. And I think that's the way the system's supposed to work.
Well, okay, let's talk about some of the numbers that you had, because in the fourth quarter, blowing past expectations in equity trading revenue. What's the market look like with a number of big ticket IPOs coming, whether it's SpaceX or others? What's your outlook?
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business. So we expect a strong M&A year globally. We expect a strong capital markets year globally, and we think the firm's very, very well positioned to capitalize on that.
Two Fed cuts you're expecting, and what about Fed independence?
Well, you heard Jan's position on that. I think a lot of that will depend, on the trajectory of the economy. I think we could see upside to both nominal and real growth this year. That would have an impact on whether or not the trajectory of monetary policy cuts continued.
20% chance of recession, he said, down from 30%. Do you see any risk of?
I'll let Jan be the speculator, but at 20%, the base case for a recession is 1 out of 7, okay, which is a little bit lower than 20%. I think the chance of a recession this year is low in the U.S., and I don't think you'd see one unless there was some exogenous event that materially changed the current sentiment. And I don't think that's a likely outcome. So it's a pretty constructive environment.
Are you seeing a necessary broadening out of the markets beyond Mag 7? And there's also the risk, of course, of a potential bubble.
Well, you've seen a big move in markets away from Mag 7. I think there's been broader participation. I think companies are investing. I think there's a big view that AI productivity is going to move into the enterprise, and that creates flexibility for a broader array of companies to invest. And so I think there's a broader level of participation, and things are set up quite constructively for the next few years. This AI productivity gain in enterprise is a real thing. It's going to take a while for that to be implemented, but we're quite constructive on that and the tailwinds that creates for economic growth and for investment.
Well, that's a good pivot to Hong Kong, because the stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course.
And that is it for Insight. Horizons Middle East and Africa up next. This is Bloomberg.